Good morning. Welcome to the trade setup right here on BQ Prime. The key is relative to the previous few days, the news flow is limited. However, for that one big element, which is actually quite standout, and which is the CPI numbers, the US CPI number at 4.9 versus expectation of 5%, and the Treasury yield slid lower on the lower CPI. Could have some ramifications maybe for financials, but nothing too dramatic. Oil has edged higher with weaker dollar and supply halts in focus. BRICS countries to discuss a common currency plan during the South Africa summit. We talked about de-dollarization picking up. This is one more evidence, although just a conversation. And in other news, US President Joe Biden will host Narendra Modi for a state dinner on June 22nd. The White House confirmed on Wednesday. And this could be something that we watch with bated breath, both in the US and India, considering that the US now needs enough and more partners in multiple areas of the world in order to counter the Chinese threat to the US dominance, so to say, if you will. So, interesting times ahead for most countries like India as well, who are trying to be large alternate suppliers and global partners as well. Anyways, so that's the global news flow. Now, the US markets in yesterday's session, you would have to agree that because of the CPI numbers, the NASDAQ in particular had a very big day. Amazon and Tesla led the up move there in S&P 500 and the NASDAQ. The Dow was flattish in the session yesterday, but the tech stocks certainly came into their own. Yields slid lower. So if you look at the 10-year yield, 3.43, I think it was lower than that as well. Volatility was down. The dollar index at 101 is steady there. I was reading the Damian Castle note on from CLSA and believes that DXY is slated to slow down even more. If you hear yesterday's conversation with Atul Suri on Talking Point, he talks about how because they've been oversold, there might be a bit of an uptick there, but eventually yields are headed lower in the US, and you could probably see that happening in India too. Let's wait and watch. The SGX Nifty will come up on your screen next, at least the trade pattern, and that is what 0.2% higher. So it's a flattish start that we anticipate in the session today. Now, frankly, the trade setup, it's a welcome relief what's happened to the US CPI number for the Fed and the markets at large. Does it result in an immediate uptick? Maybe for some of the tech names, yes, but not otherwise. I If you look at the broader end of the spectrum, which has been doing its own thing, I think we continue to see that. So yesterday, for example, quite unlike day before when the markets went up higher and came off, yesterday the markets started off lower and then recovered some of the lost ground. But PSU banks continue to bleed. So profit booking continues there. Look at the last 7-day chart of the PSU banking index, and that tells you a story. But on the other hand, NBFCs continue to stoke higher. I mean, you've seen the Bajaj Finance just continue to move higher. I would reckon the theory is that maybe, just maybe, this lower interest rates will just help some of the NBFC stocks. I mean, whenever the interest rates go down lower. Yesterday, we saw that Indostar Capital on the talk or on the reportage of how some of the marquee investors like Carnelian of Vikas Khemani or Rosie Blue, or for that matter, Madhusudan Kela getting into that stock really shone in trade yesterday. Select capital goods stocks seem overbought as per chartists, and you might have to, it'd be interesting to see what happens to some of the ABBs and the Siemens of the world with the valuations that they are trading at. But Larsen and Toubro, some of the other smaller names which are trading at much better valuations, I think there are a lot of fund managers who are talking about shifting focus to that area, and that is to be watched out for as well. Clutch of results today. Asian Paints, arguably one of the most important ones, but Eicher Motors to be watched out for. Deepak Nitrite and Alkyl Amines to be watched out for as well. Zensa Tech from the tech space. Dr. Lal PathLabs from the diagnostic space. So enough and more action. And Siemens, of course, from the cap goods space. So enough and more action to be watched out for. Keep in mind, UBS upgraded Siemens just yesterday, just 2 days before the numbers. Certainly put Siemens squarely in focus. Now, the stocks to watch in the session today at 9:15 immediately. Dr. REDDY'S, I believe, has a bit of a downtick up its sleeve today. So here's the numbers first. So revenues got up 15%, 6315 versus 6248. but the EBITDA performance left a bit to be desired. 1588, the estimates were 1591, margins 25.1 versus 25.5, and this was on account of rev limit. Strip out rev limit and not the best. Net profit, forget the 889%, but 960 crores versus 1034 crores. Now the highlights are the more important piece of Dr. Reddy's, and I'm not getting you a brokerage reaction on purpose because brokerages are largely sanguine, but look at the Q4 highlights. So if you look at what rev limit did all through the last couple of quarters, there has been a bit of a sharp decline post those rev limit highs, and the core business performance has been found wanting. Analysts, in fact, estimate 16% operating profit margin for core business, excluding rev limit, and which shows deterioration over the previous years. The core EPS, excluding brand sales and rev limit, could be low, as low as 30 rupees as per analysts as well. So the point being, if you strip off rev limit and certain very few notables, the overall business performance has not been that great from Dr. Reddy's, and that's a bit of a concern. What is also a bit of a concern that the street was over-positioned on the long side when it came to Dr. Reddy's, so you might see some bit of a reactive move there today. I might be completely wrong, but I do believe that Dr. Reddy's could have a bit of a reactive move today. Watch out for that one. Watch out for L&T, could have a positive move, and I think the CLSA note captured it best, so I should bring it to you. And the note says that the key message from L&T's Q4 guidance was that not only did it beat 3 of the 4 FY23 guidance targets, but also guided for an even stronger FY24 on a higher base. The key surprise in orders was the mega defense orders, which were not announced. It sees an improving outlook for the $122 billion pipeline, 14% plus YOY for its core E&C business, with the revival in domestic capex ahead of the elections. That is still to be watched out for. Currently, we're seeing a large portion of government capex coming upstream, but a large revival in capex ahead of elections, most certainly possible. And while core E&C business margins declined and disappointed, its actions to improve the return ratios could soothe nerves. This is the view of CLSA on Larsen & Toubro. Let me try and see if I can actually give you some other brokering views as well on L&T, just to get a sense of what others are saying. So Nuvama, for example, says that execution pickup cushions the OPM hit. They have a buy with the target price of 2750, which was 2500. They have revised the FY24-25 EPS by 3% apiece. FY24 downwards, FY25 higher. But the point being, if indeed everything sounds okay for cap goods, then even this one could do well. Jefferies is a lot more bullish. They say the beat on order guidance after 7 years. They believe it should benefit from execution and margin recovery as the impact of sharp commodity price rise ease. They have a buy on Larsen & Toubro. The target price has been raised from 2650 to 2900, which is about a 22% uptick to the current market price. So like I said, people are analyst views both on Reddy's and Larsen could be mixed, but to my mind, Reddy's has a slight problem at the start of the trading day up its sleeve because of the positions as well. Larsen, on the other hand, could be the one to watch out for on the positive side. Gujarat Gas, look at compared to estimates, and you had to anticipate this, despite the fact that the models are slightly different than Mahanagar Gas, but just the quantum of beat that MGL did, you would have anticipated the Gujarat Gas would also beat on the operational metrics and the profitability and the margins, and that's what it's done. 14.26% EBITDA margins, estimates were 10%. Net profit 370, estimates were 261. Extremely strong buoyancy out there, and therefore watch out for Gujarat Gas, though it's reacted a little bit to the MGL numbers as well, but I suspect that there could be more in store. Novelis numbers were largely in line with estimates, though brokerages sound confident about Hindalco. 3 notes that I read, all of them pretty confident about what Hindalco could do by virtue of what Novelis has done. MCX, DMA has been permitted in commodity derivatives for FPI, and therefore you might well see this stock react today. Adani Enterprises would be very interesting. Remember, that's the epicenter of the fundraising plans of the Adani Group when the Hindenburg saga hit. Now, after that, after 5 months after that or 4 months after that, the company's board will consider and approve, maybe on May 13, a proposal of raising funds by way of equity share issue or any other eligible securities. This is just an enabling provision as yet. The action will be taken later on, but it brings the stock firmly in focus. If the management is thinking of doing this, it must be confident about the acceptance is what the market might believe. Do watch out for Adani Enterprises today. Standard disclaimer, of course, the company via its subsidiary AMG Media Networks holds 49% stake in Quintillion Business Media, which is the owner of BQ Prime. You might want to watch out for that. Some equity lock-in expiries. Medanta, the lock-in of 114.129 crore shares expires, and shares will be free to trade from Thursday, which is today. And on Bikaji, a bit of an advance notice to you viewers, lock-in of 15 crore shares, which is about 63% of equity, expires, and shares will be free to trade from tomorrow, which is Friday, 12th of May. So do watch out for both of these. And yesterday, some of the local securities brokers in Mumbai messaged me about the positivity or the optimism in the Apollo Tyres con call. And therefore, I thought I should bring to you what Motilal Oswal is saying about Apollo Tyres. So they maintain a buy. With, the target price is 430. They say amongst the peers, Apollo Tyres offers the best blend of earnings growth, balance sheet deleveraging, improving capital efficiencies, and most importantly, cheap valuations. They see scope of re-rating driven by sustained discipline in capital allocation and the subsequent improvements in ROC. So that's the Motilal Oswal view. Like I said, somebody was telling me this yesterday that volume growth plus a free cash flow, which might lead to deleveraging and improvement in ROC as well. And of course, the fact remains that it is trading at a much cheaper valuation compared to um, some of the others. Market cap is nearly half of MRF, um, and the operating leverage could kick in to play here for Apollo Tyres. So do watch out for that stock. Lastly, before I wrap up, just one quick thing. You need to watch out for, or two big things. Firstly, you need to watch out for Godrej Consumer, because most brokerages are fairly constructive on Godrej Consumer numbers as well. I thought the numbers were in line, but I was reading a note from Nuvama which says that it's a solid beat and the outlook is promising. They expect GCPL to sustain the momentum and deliver volume-led growth, followed by innovation drive and multiple product launches going forward. They have a buy on this one. The target price is 1105 versus a current price of 951. And I think I saw a couple of other notes as well, which were sounding constructive on Godrej Consumer Products. So that is a stock that you should certainly need to keep in mind. I'm just trying to see the other note. Yeah. So Macquarie, for example, said the 4Q EBITDA is in line and above their estimate. Growth in India was broad-based as well. Their upsides are about 5-6%, not too much, but they have a 12-month target price of $1,000 as well. So do watch out for that too. I will watch out effectively for 2-3 things. One is the confidence of the Adani management in considering a share issue. MCX, by virtue of the permission that is being given to FPIs, usually brings about or evokes a reaction. And Larsen and Toubro, even though one of two brokerages might have been a bit skittish, overall, I think L&T, by virtue of the fact that it's cheaper, much cheaper than a Siemens, ABB, etc., and is also a direct capex play, could well be a stock that should be in focus, especially after the optimism that is radiated for FY24. There's a change at the helm too, but I don't think that matters too much. SN Subramaniam, NBFCs was in the thick of things for L&T all this while, and therefore comes on ship as the man who will steer it daily. AM Nayak becomes chairman emeritus, so to say. Thanks so much for tuning in, viewers. A bunch of conversations lined up. Venkat Chasti of Suven Life. KEI had a decent quarter. Anil Gupta joins in to talk about that. We talk about anomaly in trends of crude with Probal Sen of ISEC. So 2-3 interesting conversations lined up today. Do tune in for some of these. Thanks so much for tuning in to the Trade Setup today.